Hi everyone and welcome to this week's market commentary. I hope you're all doing well. Had a great long weekend. It was nice having a couple of days away from the market. Always a bit volatile when we have sort of bank holidays because although from a spread betting point of view we can trade, we certainly do see some volatility, which means probabilities certainly reduce. But we still had some interesting movements which I'm really looking forward to covering in this week's commentary and looking at where we might see some potential opportunities. Now, I thought I would start with crude this week because crude basically has been in this sideways consolidation from about really the start of the year, actually. We can see that we've not really been able to break out. We've had little goes up and down, but it's not sustained itself after this big sell-off that we've covered in previous commentaries. But the reason it's getting really interesting is purely we're getting very close to those highs. Now, whether or not we'll break them, whether or not we'll get there in the coming week, who knows? But we can see that round about 5,500, this price here, it does look a very significant area, and we are only about what 320 points, 350 points away approximately. Now, although that sounds like a lot on crude, it's not really, and we can quite easily do that in the space of a couple of days possibly. So I'm definitely going to be looking to see what happens. Now, the only thing that I would say is I'm not too keen on this one taking the breakout straight away, and it's purely for this. When does a consolidation complete? Really, it's when we get bounces off levels. So we've had the first move up, it bounced and came down. So really what I'd like to see is it to come back down, then I could look for the breakout. But depending on momentum in the market, we'll see what happens. So this would be a really nice market from both a swing point of view and a day trading point of view. So I would definitely have 5,500 set as an alert, so you know when it hits that or if it gets there. Alternatively, we need to get back to the lows, which is about 4,250 approximately. We're a little bit away, but again, that could happen quickly. But if we can come out of this range, there's a lot of good potential that this market will go into a new trend, either up or down. So keep your eyes peeled and set your alerts on this market. Now, going on to the US markets, the Dow's actually been really interesting because although it was starting to show some signs of sell-off, this is where candles really kick in because we've had two absolute beauties on the Dow. You can just see when we came back down to those lows, we put in a lovely reversal candle. We even put in a second one here. And then obviously yesterday, which was the bank holiday Monday, and this is what I'm talking about. So although it was a bank holiday in the US, we had a big move up that day, and it was a fairly sizable move. So again, although we're showing signs of a sell-off that we might want to sell based on the fact that for the first time since this rally began, we do have a slightly lower high. What we're really looking for though, and this is the key part, it's always about firstly, do we get to the area? So can we get back to this area here? Well, the answer is yes. Then the question is, what reaction do we get when we get there? And as we can clearly see, we've reacted and bounced off of that level. Now that we've done that, a bit like what I spoke about on crude a moment ago, if we can now take out these lows, it looks really good for some potential downside. Alternatively, do we go back up to the highs? Where we are right now, this is off the table. We're in no man's land. We've got a lot of areas that we could react to, and there'll be a lot of volatility. So where it is right now, it's not tradable, or it's the probability of success is very low. However, if we can come back down to this area here, or get back to these highs, it could be really interesting. My preference at the moment is starting to turn a little bit bearish, so I would take it on the point that if we can come back down here, look for a breakout from that point of view. And the reason for that is we have had slightly lower highs on the weekly time frame across the US markets, but we'll see what happens as it plays out. We just take a look at the Nasdaq, it was the same. Lovely reaction at those lows, and we've pushed up. But again, with the Nasdaq, if we can come back down and take out those lows, it's looking really good for some potential downside. Whether or not that happens remains to be seen, and we'll keep an eye as the week evolves. Now, here's an interesting one. I'm going to finish on an interesting one today, which is gold. The reason it's really interesting is we don't often get gaps because we're currency traders or we trade indices. What we have is we have markets that are 24 hours a day. They run from Sunday night through to Friday night. So often the gaps that we get are between that Friday night and the Sunday night. Because when we open and close with markets or close then open, we can have orders that can mean that we see gaps in the market. So that's why often stocks, because they close every single day, you'll often see stocks that aren't running 24 hours much more gappy than the markets that we look at. But you'll notice here, if you can just notice, we've got quite a large gap. Now I'm going to drop it down to the 4 hour, and this will really start to see. So you can actually see this market closed here. Gold closed here on the 2nd of April, and it actually opened up here. Now I just want to put this into some context for you. That is in essence of points. It's about 134 points, so it's quite a sizable gap. Now, you may have heard the rule of thumb, which is gaps often fill. And this is proving itself to be the case because we're now starting to press down. So temporarily, I wouldn't be surprised to see if gold can come down and fill that. But the reason that this is of interest to me is I want to show you a potential trade that I kept a little eye on. Now, the reason I didn't take it in part was because it was the Easter break, and I don't like really trading when we've got bank holidays because often we can lack momentum. Because if you think about it, the big banks aren't necessarily around, or they're not around in full force. Therefore, if we get any movement, is it real movement? Is it real market flow that we trade on a regular basis? But I was looking at a possible breakout, and it's on the 15 minutes. So what we had, I'll just delete the drawings here. So you can see the gap, and so there's the levels there with the gap. But what you'll notice is at the start of that day there, we had this consolidation. So I was considering whether or not I would take a breakout here because we were also at a previous high or resistance, which there. So you'll see we've got this high here, approximately. So I was looking at this for a possible breakout. Now, the reason I didn't take it, and although it did move up, it wouldn't have hit my target based on what I look for. The reason I didn't take it was in part because of Easter, but also because of this gap. Whenever you see this, and it often happens over weekends, it's always worthwhile being a little bit cautious because as you can see, the market struggled to maintain that breakout and now it's starting to show some downside. So actually, it looks quite nice for a possible move back down to fill this gap. And I wouldn't be surprised that if we revisit this in next week's commentary, if that gap is in one way or another filled. But it's just good. It's a really important thing to be aware of that because Sunday nights, if we see gaps, how do they impact our trading? That's why if you've got swing trade orders in, it's worthwhile removing them on a Friday before the market closes, just in case you get gaps, and then you can reopen them on the Sunday night if nothing's really happened, or if there's a big gap, it can often save you because if it gaps up, you could end up getting a worse price, which impacts your risk to reward. So that's us for this week's commentary. I hope you have a fantastic trading week. Markets are definitely getting going, but they're still within ranges. But what's really interesting, if you look at some of the markets, we're within ranges that if we can break out of these, which we're building up to, we're going to see some lovely opportunities. So stay vigilant to that. Make sure you're setting alerts, a bit like crude as we discussed earlier on, and we'll catch up and see what's been happening in next week's commentary. So thanks for watching, and I'll see you next time. Bye for now.